What's going on, everyone? My name's Obi, and welcome back to the Courtside Financial podcast, the podcast where we talk about business and technology. Today's episode is going to be an interesting episode because we're talking about one of the most intense battles going on in the EV space. It's something that's got me fired up, and not just because I'm long NIO, but because most people might be missing it. See, while everyone's focused on monthly delivery numbers, which matter, there's a chess match happening right now in real time that's going to determine who survives and who thrives in this market. We're talking about William Li versus Li Zhang versus Elon Musk in a three-way battle for the soul of the premium electric vehicle market. And here's the kicker. This isn't just about cars anymore. It's about consumers fundamentally rewiring their programming of what their family vehicles should be. Let me paint a picture of what went down this week that has me so amped up. So picture this: August 21st, Chengdu, NIO drops their ES8 with a starting price of 416,800 Ren. That's a massive 81,200 Ren price cut from the previous generation. But here's where it gets spicy. When NIO's media team lands at the Chengdu airport, guess whose ads are plastered right behind them? The Li Auto i8. Now that's some next level psychological warfare right there. Li Bin, the CEO of NIO, comes out swinging, admitting that they screwed up the pricing strategy on their second generation ES8. His exact words were, the mission of the all-new ES8 was to correct those errors and return it to its rightful place. That's CEO speak for, we priced ourselves out of the market and it almost killed our flagship. But here's what's fascinating and why I think this move is brilliant. They're not just killing prices for the sake of it. William Li specifically said that the all-new ES8 still is going to retain gross profit even at these lower prices. That tells me that they've achieved some serious cost optimization, not just margin compression. Now Tesla's not just sitting on the sidelines. They dropped their all-new Model YL, a 6-seat version at 339,000 Ren. Classic Tesla move. See the competition heating up, jump in with a Me Too product at an aggressive price point. But here's where most analysts are getting this wrong. They're treating this like a zero-sum death match. I think we're actually watching something much more interesting. A coordinated assault on traditional ICE vehicles that's only going to expand the entire market. Let's talk about why this battle is happening right now, because financial pressure is real for everyone involved. Li Auto, they hit 500,000 cumulative deliveries in 2024, and they're the first among the new forces to do so. Sounds great, right? But dig deeper, their net profit dropped from 11.81 billion Ren in 2023 to 8 billion in 2024. Gross margin fell from 23.5% in Q4 2023 to 20.5% in Q1 2025. Why? Well, the Li Auto Mega was supposed to be their premium play. It was supposed to be their Model S moment. Instead, it only hit 1,000 plus units in 3 of 12 months. Even with the recent uptick to 2,300 to 2,800 units in June and July, that's still nowhere near the 6,000 to 7,000 monthly volumes that the Buick GLA and the Toyota Sienna are pulling. So what saved them? Well, the L6, a smaller, cheaper, extended range SUV under 250,000 Ren that's now doing 20,000 plus units monthly. But here's the problem. Success with lower margin vehicles is dragging down their overall profitability. They need the i8 to work, not as icing on the cake, but as something that's going to correct their entire fundamental strategy. Now NIO, and this is where it gets personal for someone like me who's been in this trade, they delivered 220,000 vehicles in 2024. Q2 2025 was their best quarter ever with over 70,000 delivered, but they're still losing 22.4 billion Ren annually. And Q1 2025 losses actually increased 30.2% year over year to 6.75 billion Ren. Now the Envo L60 has been solid. They've been getting 6,000 units monthly since Q4 2024, but it's not moving the profitability needle. That's why the L90 and this new ES8 aren't just product launches. They're make it or break it moments for NIO's entire ecosystem. Now let's talk about the elephant in the room. Tesla's struggles in China, and they're real. 657,000 vehicles sold in China in 2024, but they've only got 8.8% growth, while the overall new energy vehicle market is experiencing somewhere around 35% growth. First half of 2025, well, Tesla's actually down 5.4% year over year, and that's not just a blip. it's a trend for this company. And here's what should worry Tesla shareholders. Their gross margins are getting compressed. Q2 2025 margins hit 17.2%, down 0.8 percentage points from the previous year. In a market where they've always commanded premium pricing, they're being forced into price wars with brands that just have lower cost structure. The Model Y L is Tesla's answer, but honestly it feels like bringing a knife to a gunfight. While Li Auto and NIO are creating these luxury living rooms on wheels with zero gravity seats and massive screens, Tesla's still erring on the side of minimalism. And that's something that Chinese consumers who are voting with their dollars are saying that they don't necessarily want. But here's where I think that the market is missing something crucial. This isn't just about three companies fighting over the same customer. This is about fundamentally changing what Chinese families want from their vehicles. Think about the Pepsi and Coke challenge in the late 70s. Pepsi and Coke spent billions trying to destroy each other, but what actually happened? They created the concept that carbonated drinks should dominate beverage consumption, essentially marginalizing juice and tea. That's exactly what's happening here. Li Auto, NIO, and Tesla are collectively selling Chinese consumers on a new concept. Your family's primary vehicle should be an intelligent electric SUV, not a traditional sedan. Look at the casualties: Toyota Camry, Honda Accord, Volkswagen Passat, all down significantly from their peaks. The Chinese 3 and the German 2 are getting systematically displaced by brands offering more space, more intelligence, and lower operating costs. And there's a policy tailwind that's underappreciated. The trade-in subsidy program up to 20,000 ren for scrapping ICE vehicles and buying new energy vehicles. That was extended and optimized in 2025. Over 60% of trade-ins in 2024 went to new energy vehicles. That's not just organic demand, that's structural market transformation. So what's my take as someone who's been riding this NIO wave? First, I think the ES8 price cut is something that's brilliant, not desperate. William Li's team figured out how to maintain margins while dramatically expanding their total addressable market. If they can deliver on their Q4 profitability target, and I think the ES8's positioning gives them a real shot, it changes the entire NIO investment. Second, this three-way battle is validation that the market for improved family vehicles is actually growing. When Tesla feels compelled to rush out a 6-seater version of their already a smash Model Y, that tells you that the competitive dynamics are shifting fast. Third, and this is crucial for anyone investing in this sector, we're not just thinking about car companies anymore. We're investing in lifestyle and technology platforms. The winner's not necessarily going to be who sells the most car. It's who best captures value from the complete ownership experience. Anyways, that was it for this Monday episode of the Courtside Financial Podcast. If you found it useful, helpful, informative, at the very least entertaining, make sure you hit the like button, make sure you hit the subscribe button, click the notification bell icon, and leave a comment down below. Share the video as well. All your engagement really does go a long way in helping us to reach a broader audience and getting more people in tune with what's going on, because I think that this is information that people need to know. Anyways, Obi signing off. I'll catch you in the next installment. Happy Monday. Goodbye.